think there's been a lot of let's call it dismay in the Bitcoin community when they're expecting these huge rip ups every 4 years, and it doesn't happen exactly as they're expecting. There's a little bit of a reality versus expectations mismatch there. Number two, where we'll spend most of our time on today's episode, CFTC allowing crypto as collateral for derivatives trading, something that I think that is extremely important, has been going a little bit under the radar in the broader crypto and specific for us Bitcoin space. And then finally, my favorite image here of Ursula von der Leyen. I have to shout out the original creator. His name is Levels.io on X. Go ahead and find his post there for where I got this image from. But the EU and the US kind of confronting over free speech, or at least speech on platforms. So I'll leave it at that. I think we'll get into more of that as we get there. But let's just start with metals. Matt, you've touched a little bit on what's going on, kind of why are you seeing this kind of big split in terms of expectations versus reality in the Bitcoin community. I want to just pass it over to you. What are you seeing in metals, and why is that kind of driving the topic, the headlines over the last couple of months?
Yep. So I'm not going to get into the depths of mechanically why metals are breaking out in terms of the exchange. There's a lot of interesting stuff going on the geopolitical front, right? We've talked about the breakdown of the world order from a unipolar moment, consolidated and tightly connected financial markets, which includes the financial side of settlement of the global commodities trade. I think the key thing to get in here, what was 2025 and like the historical record, what's going to go down on, what was most important this year on the financial footprint. In my opinion, it's the breakage of metals pricing mechanisms from the legacy, kind of just call it the old world order at this point, post World War II to 2020. London cleared derivatives contracts, futures, et cetera, it started with gold. Well, actually, it started with LIBOR. We killed LIBOR, moved that interbank market, and all of the settlement activity for the collateral layer in the US dollar, like on the financial side of international trade, moved over from Europe and or London centric towards the United States. But we've been seeing, as 2025 has played out, the gold bull market, that really started in, you could say it bottomed in with like right about the time of the FTX event, which was Cameron, November 2022. 2023, that bull market was starting to pick up steam. It was really clear in 2024. Once it broke through that 2000 level, it was off to the races. But gold just continues to be in a historic up move, which tells you a lot about what's going on in terms of international collateral for settlement of trade, cross-border trade, what's going on there. But I think 2025, the key development, what's going to go down is the breakage and the metals themselves, like just broadening across the board from gold into, you're seeing it in silver, you're seeing it in platinum. Just pick a metal. It's probably
Just
the
this
chart
chart here.
looks like you're
Yeah.
seeing a technical breakout, copper, etc. But I put platinum here because from the Bitcoiners' perspective, most of us, or you could say the crypto crowd too, like a tangential movement who we think are, in my opinion, probably Cameron agrees. He definitely agrees with us. We talked about this, but a misguided fork of the Bitcoin adoption wave, in my opinion. But this is what your 4 year cycle kind of maximalist would have expected for something like Bitcoin to do in the late stage of the halving cycle dynamic that's played out prior three times. And I think everybody was looking for that pattern to materialize. It didn't in Bitcoin. And I think that's why, you're seeing things. I put out a tweet this morning or an X post. I don't know if you can still call them tweets. It's kind of resonating. Just The sentiment in Bitcoin right now, you hear a lot of influencers who've been here for decade, over a decade, um, just calling out how low the sentiment right now stands, and you see it kind of showing up in, 2, 3 months ago, right? It was the what was the op return battle
Yep.
internally.
Filters.
That one seems filters put to rest. Now it's quantum, but it's just in this moment right now where um, Bitcoin's in that place where I think a lot of people are going to go through and update their models, not tear down or revisit, because I think everything uh, is largely just structurally intact. The core value proposition of Bitcoin, the long thesis, all of that. But I think some of the weaker assumptions that get piled onto that aren't actually, grounded in reality, such as just pattern recognition things like, oh, the 4-year cycle, or, I don't know, we could name other ones.
Rainbow
What
chart or
we need to
whatever.
change
Yep.
Bitcoin, so rainbow charts, yeah. You know, mental maps are, it's kind of that thing, the map is not the territory. And I think what's going on in the metals is a good opportunity for the Bitcoin kind of longs, the investor base, who are here for the long haul, to update their thesis. Like look to the metals, what's going on with that trade. When I say trade, yes, there is some element when you compare to other people, their performance, if they're just a gold miner investor or something like that. It is one of those end of year things where I think people do compare to their neighbors, right? You only feel as rich as you are on a relative basis to the other houses on your block. I think is sadly the way just humans tend to compare themselves. So with Bitcoin having a flat to down year and metals breaking out, I think it's just a time for reflection, but really it's an opportunity to put some more muscle on and come back with a bigger, better foundation for what's ahead. We'll get to that in a second. But in terms of what's structurally breaking here, the the venues where pricing of global commodities takes place, right? We talked about in the past the importance of sea routes for international trade. Um, a lot of things involved here. Importance of naval power. You're seeing that play out in other stories that we cover on a week to week basis, like the Venezuela situation. We
Gulf
won't
of the
touch on
Flame.
that this week,
Yep.
but the the venue where the commodities get priced is a key kind of power hub for, I guess what you say, just geopolitical and financial power, right? And historically, under the previous, let's say, 500 years era, starting in 1492 and continuing to this day, um, under the European colonial model, the pricing mechanism, and especially as that European power shifted um, from, let's say, like the Habsburgs, the Spanish Portuguese Empire, and they traded off. They handed off power starting in like the 1600s, and it went to London and the Anglo-Dutch Empire. That center of just price clearing and price setting really lived in London, and I guess you could say a little bit in, um, you know, continental Europe more broadly, but mainly London, right? And so all of that international trade, Europe trading with Asia or Southeast Asia, US, trading, same places, all of that center of gravity has kind of always held for 300, 400 years. And it is like the powerful ring that is wielded like in the Lord of the Rings series, right? Um, and what you're seeing in the metals right now is largely a breakdown. The start, we losing LIBOR was the start. Then, really in 2025, um, it became clear there was something going on in gold, with the movement of the physical gold itself from European vaults, London vaults, Swiss vaults, et cetera, and making its way into New York and Shanghai, as centers of power where the gold was held. Now that pricing mechanism is also breaking down and it's showing up in other metals. So that pricing power is moving from, let's say, the LME to other markets more broadly, whether it's the COMEX in the U.S. or out of Hong Kong and its counterpart. I think what we're really seeing here with this metals markup is part of this bigger transition we've been talking about all year that's underway, not just on the geopolitical front, but in money more broadly, and where the rubber meets the road. Like when you think about um, trade, like in goods and services, right? Money is one half of the trade, but on the other side of that is the actual transfer of value, which is in the good or service itself. And at the bottom of the stack, the lowest level, like in terms of value add, your starting points, by definition, those are the commodities, right? So we're really seeing a transfer of where the pricing of value takes place on a sovereign standpoint. And I think our core thesis here that we hold to as we kind of view the tape and follow what's going on our weekly roundup,
Yeah.
Cameron. I think the core thesis, what we do know. I don't know ultimately where it may settle out between New York or China, Western Hemisphere versus Southeast Asia. But I think it's pretty certain that the power that Europe had or held over the globe under that peak era, the second half of the I don't know what the word is, second millennium, I guess, like 1500 to
Yeah.
2000, 2020-ish. Um, the world is shifting, and you're seeing that right now. So, yeah, what we're seeing in metals, I'd call it gradually, then suddenly, that is what you're seeing on this chart. Is every Bitcoiner is familiar with these things happening. Now, this doesn't mean, uh, the Bitcoin adoption cycle, all of that. It's broken, et cetera. Just means you're in consolidation. It's not its time right now to make a run on the chart. So that day will come. But yeah, I think that's what I was getting at in a tweet that seemed to really resonate this morning. It's talking about why sentiment right now is really on the floor in the Bitcoin space, which is also generally a good sign. This is when you want to be building and entering or making moves is generally the best time. When everybody is euphoric and bidding up prices, generally not the time to be launching new businesses, conducting acquisitions, all of that. So actually, the bearish sentiment in Bitcoin, if you're really along and in it for the long haul and high conviction, um, it's actually a good thing for you, in my opinion. So we'll leave it there. If you want to learn more about what's going on in metals, I am not an expert here. You're talking to people who actually interact with the futures market, take physical delivery, all of that stuff. Um, that's not my background. I just know enough to kind of just keep my ear to the ground, know what's going on, and see how this affects fixed income markets, et cetera. Um, but someone I recommend here is Vince Lanci. His Twitter handle is Sorenthek, Sorenthek. He's on Twitter. I mean, right now, this is his bull market and just followers, like what's going on in, metals. This is right up his alley. So it's his 15 minutes right now. Some of his stuff, like his Substack or X subscription feed, might be behind a paywall, but there's enough out there. Go search him on podcasts, and he'll get you plugged in to understanding what's going on in metals if you want to understand that deeper. So I'll leave that one there. I think that puts a bow on it. But 2025, in my opinion, Time Magazine put AI on the cover. I think that was late. Maybe 2024 was the AI year. 2025 should be metals front and center. And it's last night we were talking to, a couple people we didn't know. I just wanted to ask people like on the street, not in our industry, um, hey, do you know what the price of gold is? What the price of silver? Like there's a general sense like, oh yeah, gold's high right now, silver's high, but there's no depth of understanding in terms of what's going on in the big picture context. So this is still not trickled in with the general public, in my opinion. And I would also add to that just the broader financial investments, profession in general. I think it's still relatively early in these things taking shape. And this is after, the changes on the plumbing end and settlement and delivery mechanisms and the pricing structures of metals and commodities, like getting underway since 2013, 2014. So it's slow moving, and then things change very quickly. But this is a huge story